Guys, I appreciate you joining us today. I don't know how much Chad has told you about why I am here. Out of curiosity, does anybody know who I am? Know why I'm here? You do. So why am I here?
You're here to talk to us about supplemental benefits.
Supplemental benefits. Fantastic, Ben. Absolutely. So sounds like Chad has communicated. Hopefully you've seen some of my flyers around with the dates that I was going to be here. But I'm here to sell you more insurance. Right? Right? Are y'all excited to talk about insurance as I am to share it with you? No. And guys, I'm not naive enough to think that everybody's excited to talk about insurance. So I'm not going to keep you long today. I know I'm separating you from getting your day started. So I'll be as quick as possible. And I'm going to leave you with some information that you can go home and look it over. But I'm not here just to sell you more insurance, right? I'm here to tell you a little bit about what we do. And if what we do works for you, then we can talk at a later date. But I want you to be aware that regardless of whether you participate in any products I talked to you about today, you will have an accidental death and dismemberment policy provided to every one of you at absolutely no cost. Chad has decided to do this for you guys, and it's completely paid for. You do not have to pay $1 of it. And that is whether you participate in any of the products that we offer here today. So supplemental benefits. What is supplemental benefits? Anybody know? Dental and vision. Has anybody ever heard of Aflac? Mm-hmm. Everybody knows Aflac, right? And that's great, right? It's great that that company is recognizable. But the sad truth is, although it's a 94% brand recognition, very few people actually know what it is we do, okay? Now, we are not Aflac, but we do exactly what they do. The best part is we don't have to pay the duck, right? No, I'm kidding. Nobody pays the duck. It's a digital creation, right? But they put a lot of money into marketing, and we put that back into our policies. So we're able to save about 14 to 20% on what Aflac's premiums are, okay? Now, my name is Brandon Smith, and I'm with Combined. Has anybody ever heard of Combined? Nobody's heard of Combined? Anybody ever heard of Chubb? I know it's a horrible insurance name. So you've heard of Chubb before. So do you know who Chubb is? If you had a best guess, what would you say Chubb does? Business insurance, that's absolutely right. So it's important to have a company like Chubb behind us. Chubb is the largest property and casualty insurance company in the world with $200+ billion in assets. And I'm going to explain to you why that's important today. But I wanted to start by first making sure that you thank Chad for offering you guys this opportunity. Because today it's 100% up to you whether you participate in these products or not. But at least Chad's coming out of his wheelhouse to make them available to you. Okay, and that's important, especially in the world we live in today. So let's get started. The best way for me to tell you what we are is to tell you what we are not. Okay, and we are not major medical health insurance. Major medical health insurance pays who?
The doctor.
Right. If you get sick, you get hurt, and you go to the doctor, your insurance company pays them. Right? But who pays you? If you're at the doctor, who's paying you? No one, right? Chad can't. And see, the sad truth about it is most people are living paycheck to paycheck regardless of their income. It doesn't matter if they're making $2 an hour or $200,000 an hour. People live to the lifestyle that they're accustomed to, right? And so we are not major medical insurance. All of our policies are designed to pay you cash directly. You decide how that money's spent. You can use it for a house payment. You can use it for a car payment. It does not matter. But with most people living paycheck to paycheck today and a major illness or an injury occurs, who's going to pay you? Right? And that's where we come in. Okay? So, with most people living paycheck to paycheck, the number one cause of bankruptcy in America is what? Does anybody know? Medical bills. Absolutely. Did you know 3/4 of the people that file bankruptcy every single year list medical as the primary cause, that listed medical as the primary cause, had health insurance? Over 3/4 of the people that file for medical bankruptcy, they had health insurance. Wait, why are they filing bankruptcy if they have health insurance?
No money going into their pocket.
Because no matter how good your health insurance is, your health insurance does not pay you. If you're sick and injured and can't work, you don't get a paycheck. And that's what our policies do. Now, most people that take our policies out, and I'm going to explain them to you here in a minute, And I'm sure there's probably a question of, that's great, but how much does it cost? Well, I want to go ahead and get that out on the front end. Our policy start at about $3 to $4 a week. $3 to $4 a week is how much our policies start at on average. About $4 to $8 a week is what most people participate in. Okay, so we're not here just to drop a whole bunch of more insurance on you. We're here to make what you currently have, whether that's a lot or none, work more for you. Is that fair? So when people participate in our products, they usually use it for one of three things. The first is out-of-pocket medical expenses in the form of deductibles, co-payments, co-insurance, right? Because no matter how good your health insurance is, Blue Cross Blue Shield, there's still deductibles. Deductibles are what you have to pay before your health insurance kicks in. And then you got co-insurance. That's what's left over, right? You hear 80-20, 70-30. And Blue Cross Blue Shield, you're required to pay that in addition to what they're paying, right? The second thing people use it for is loss of income. Because if you're not here at work, can Chad afford to pay your bills? And if you're not here, you can turn to a family. My family and friends love me to death. They can't afford to pay my bills and theirs. You can go to a bank, but if you're not working, is the bank going to loan you any money? We already discussed that most people are living paycheck to paycheck, so savings accounts are non-existent today. And the third reason people choose to go with combined, and in my opinion the most important, we call it MUG. Mortgage, utilities, and groceries, right? Those are those out-of-pocket, everyday living expenses that we all have. House payments, car payments, groceries, because no matter, again, how good your health insurance is, they're never going to send you a check to keep your light bill on. Okay? Whether you choose any of the policies, and we're offering 4 today, so no matter which policy you choose to go with today, there's 3 things in common. The first is they are guaranteed issue options available, and they're guaranteed renewable. So what does that mean? Anybody know? That's fancy insurance words, right?
You don't have to take a physical?
Yes, so we do it based off of a few questions. And if you're not eligible for that product, we can let you know right on the spot. Okay? Guaranteed renewable means once you have the policy, they are yours. We can't change them on you, but you can change them on us. So you heard that right. Our rates never go up. Now, that doesn't mean in 10 years a new policy is not going to come out and you have the choice to go to that new policy, but the old policy that you have stays the same. If you're paying $3 a week right now, in 25 years you're going to be paying $3 a week if you didn't make any changes to that policy. So they're guaranteed renewable. The second is they're portable. Again, you own them. I know Chad doesn't offer you guys health insurance here yet, but I know he's looking at that. But did you know when he offers health insurance, who owns that policy? He does, which means if you left employment here, could you take it with you? No. But you can our policies. They're portable. I don't care whether you start your own business, you move across the country, you retire, your policies go with you. Whatever you decide to do, your policies follow. And third, there is no coordination of benefits. Now this, in my opinion, is the most important one. That means if your health insurance covers 100% of your medical bills, we still pay you what we're going to pay you regardless. Okay? Now we do have an income replacement policy, and I'll get into it in just a minute. But we do not coordinate benefits. I don't find out what your health insurance paid and then decide to pay what I'm going to pay. I pay it regardless. Okay? So again, 3 reasons people choose to go with this type of product. First is for out-of-pocket living expenses like house payments, car payments, groceries. Second is uncovered medical costs like deductibles, co-pays, co-insurance. And the third is the lost income. Can't work, it's going to pay you a benefit. And the 3 things, no matter what policy you choose, guaranteed renewable, portable, and no coordination of benefits. Remember that, no coordination of benefits. And rate stable. So, any questions so far?
What if you're like on like state aid or something, or like when we do get to the Medicare age?
So once you get to the Medicare age, depending on the product, you can keep them with you and they'll still pay. We'll come back to a question on income replacement because there are a few differences with that. But our accident plan, for instance, if you're on Medicare and you get hurt and Medicare takes care of all the expenses, our policies still pay. Again, because it's not designed to pay the medical expenses. What are our policies designed to do? Pay you directly, and then you decide how that money is spent. Great question. Any other questions? All right, perfect. So I want to jump into what our policies are. Now we're offering, or Chad is offering you guys 4 policies, and every one of you are going to get a packet before you leave here today. Right? We want you to be able to make a decision, an informed decision, so that's why I'm here talking to you. But we also want it to be a family decision. So you're going to get my contact information. After you look through these policies with your spouse, I'm going to come back on Wednesday, and you're going to sit down with me and decide which policies work best for you. And if that's none, that's perfectly okay, because what I'm going to do is get the information because of that accidental death and dismemberment to make sure you at least get that policy. Again, make sure when you get a chance to say thank you to Chad for making that available to each of you. Okay? Again, that's 100% paid for. All right, so we offer, Chad's offering you guys 4 products today. Now, this first product, in my opinion, is the most important insurance on the marketplace today. And that's paycheck insurance. People insure their homes, they insure their cars, but your most valuable asset is what? Your ability to earn an income. Without that, can you afford the home? Can you afford the car? In most instances, no. So this is a paycheck policy. It pays you based off of your income. What that means is it'll only pay you up to 60% of your pre-disability income. So if you have to miss work due to a sickness or an injury and you're going to be out for 30 days, it's going to pay you 60% of your income at the max. Now you can't go above 60%, but you can go below it. So let's say your monthly income's $1,000. Your disability policy can't insure more than $600. Right? If your policy, and there's 2 other things to think about when you think of disability. How long would it pay me for, right? We already said how much, 60% of your income. You can go below it, just can't go above it. How long would it pay me for? We're offering 2 policies, that's 3 and 6 month benefit. It means if you're out of work due to a sickness or an injury and you have the 3-month benefit, it's going to pay you for 3 months. If you have the 3-month policy and you're out of work for 4 months, how many months is it going to pay you for? 3 months, right? And so you have a choice between those 2 plans. Of course, the longer you pick, the more expensive the plan is going to be. But the third thing and the most confusing thing is how long do I have to miss before the policy pays me? Well, the standard in the industry is what's called a 7-7 elimination period. That means you have to miss work for 7 days before it pays anything. And it doesn't pay you till day 8. Now, you can file your claim day 1, but it won't pay you until day 8. And what I mean by that is you have to miss at least 7 days before it pays. Okay? We're going to come back to the claims process at the end. But our policy has a built-in, what in the insurance world we call a rider, which pays you day 1, whether it's a sickness or an injury, if you are hospitalized or outpatient surgery. And with today's treatments, most of the time outpatient surgery will fix most illnesses or injuries, right? And if you have outpatient surgery, it's paying day 1. If you don't have outpatient surgery but you're admitted to the hospital for at least 24 hours, it's going to waive that elimination period as well. Okay, so any questions on disability? It's paycheck insurance. Pays you if you miss work due to a sickness or an injury. I want to add one thing. There's, if you are like me, you're a planner, right? You plan for life. I have 5 kids and 1 on the way. I get 2 main questions. The first is, the same wife? Yes. She was dumb enough to do it with me 5 times, have kids 5 times, right? She's dumb enough to do it again. Number 6 on the way, due in October, right? And then the second question I get, are you done? And the easy answer is no, we're not. We plan to have more. Now, of course, I can't get pregnant, right? I can't physically have children. But if you happen to be planning to have a child, this policy will pay you for 6 weeks on a standard delivery and 8 weeks on a C-section. Of course, you're going to be admitted to the hospital, right? If you're having a baby. So it's day 1 coverage, right? Again, any sickness or an injury. But remember, you can't just miss work. The doctor has to place you out. The doctor has to place you out. Any questions on that? Remember, it's paycheck insurance. It pays you if you're sick or injured and can't work. The next one is what most people think about when they think of our type of insurance, which is accident insurance. Has anybody ever had an accident policy before? Okay, so accident's easy to explain. It's a bodily injury, a bump, a bruise, a scrape, a scratch, a cut, anything from a chipped tooth to a car crash. Ouch, that hurt and I seek treatment for it, I'm going to get a benefit. Of course, the worse the injury, the more it's going to pay. And by the way, this is 24-hour coverage on or off the job. And it covers for injuries. Okay, we were just talking about pregnancy a minute ago. I always like to throw this out there, but even if you didn't plan to get pregnant, it's not an accident, right? An accident is a bodily injury, okay? So a bump, a bruise, a scrape, a scratch, a cut. At a bare minimum, you're going to get $100 for seeking treatment. If they do nothing else to you but say, hey, it's a bump, it's a bruise, go home, you at least get $100, okay, at a bare minimum. But like I said, the worse the accident, the more it's going to pay you. As bad as this sounds, they take your body apart and put a dollar amount on it. So a broken finger is not going to pay as much as a broken leg, right? Stitches, staples, the deeper, the longer, the more treatment it requires, the more it's going to pay you. If you're hospitalized due to that accident, it's going to pay you. But it has to be an injury. The only thing this policy won't cover is self-inflicted, or if you happen to be in the commission of a felony, right? You can't rob a bank, get shot by the police, and expect combined to pay you some money, right? It doesn't work that way, right? You can't be drinking and driving and have an accident and it cover you. And it won't cover sicknesses, okay? It will not cover sicknesses. Again, it has to be a bodily injury. Now, the cool thing about this policy is it starts as little as $3 a week. There's 2 plans made available to you guys. And the lowest plan is $3.36 to cover you. Now on disability, you can only cover yourself. But on accident, you can cover you, your spouse, and your kids, or just you and the kids, or just you and the spouse. And it doesn't matter how many kids you have, it's the same regardless. So someone like me, I benefit from this policy, right? First claim I ever filed on myself was my son. He was 2 years old at the time. He's running through the house, trips, falls, hits his head on the corner of the door frame. Ends up with 4 stitches in his forehead. Now, it was on a Saturday, so I didn't have to miss work. And the cool thing is my wife's a stay-at-home mom, so even if I was at work, she would have taken care of it. But we got a $420 claim for that injury. We had $250 that we had to pay out of pocket. Our health insurance didn't cover, and the rest of the money came to us. Just a few months ago, I think it was in January, my 5-year-old, I was changing my, at the time, 12-month-old, I don't remember how old she was at the time, but she was young, right, just a few months ago. My daughter, I had a towel laid down, I get my youngest up, and my 5-year-old runs through the house. She trips over the towel that I had laid down and hit her head on the bathtub. Ended up with just 1 stitch, right? Super simple. Super simple, and we got benefits for that. Just for a simple stitch. Now, that may not sound like a whole lot of money, $420 for a stitch. Like, how much did the medical cost? Right? But again, remember, we're not designed to pay the medical bills. We're designed to pay you, and you use that money. Now, like I told you, the luxury I have is my wife is a stay-at-home mom, but let's say I was a single dad, and I dropped my kid off at school on Monday morning, and Monday afternoon I get a call because he fell off the monkey bars and broke his arm. Not only do I have the medical cost, but now I've got to leave work to go pick him up and take him to the emergency room. They fix his arm, and then 2 days later we find out he has to go to an orthopedic surgeon. Now I've missed work for the surgery, I've missed work for the injury, I may miss work for the surgery, I've missed work for the visit. These are the things that people are filing bankruptcy for. It doesn't seem like a big deal, but now I've missed 2 or 3 days worth of work when I'm already living paycheck to paycheck. Right? And that's what our policies are designed to do. That $420 as a single dad could have kept groceries on the table, could have kept the lights on in that event. Any type of injury. Ouch, that hurt. This policy pays a benefit for it as long as I seek treatment. There's one thing that this policy does in addition to paying an injury, which once a year for going and getting a checkup, this can be a wellness, a physical, an eye exam, a dental exam, it's going to pay you a wellness benefit of $50. And that's 1 per policy. So your son could go get it, but it's only one per policy. Not everybody gets that benefit, just one time per year. And that's really 3 months of your premiums back to you. That's called a wellness benefit. Again, this one covers any type of injury. Ouch, that hurt, this policy pays a benefit. Now, let's look at these two together real fast. I call this our working man's package or working woman's package. For someone that's working, this is probably going to be the package that most people get. I'm not saying you need both. I'm not saying you need any. But I'm saying statistically, one of these two things are going to happen to you, right? And that's an injury, a bump, a bruise, a scrape, a scratch, a cut, or you have to miss work due to a sickness or an injury. Now, what happens if you have both? Remember I told you to remember no coordination of benefits? Not only do we not coordinate benefits with other companies, we don't coordinate benefits with ourselves. Which means if you were in a car wreck and you had to have surgery, you were going to miss 6 weeks worth of work. It was a bodily injury, so you're going to get paid from this one, right? You missed 6 weeks worth of work, are you going to get benefits from this one? Yes. Right? They don't coordinate benefits. As long as it is covered under the policy, you're missing work, and it was an accident, it's going to pay. Any questions on those two? Yes.
So, say I am injured on the job, how does this work with my workers' compensation?
Well, I'm so glad you asked. This is 24-hour coverage. So those of you that didn't hear, he asked, what happens if I'm hurt on the job? How does this work with workers' comp? It's 24 hours a day. So if you've ever had a workers' comp experience, workers' comp is great, but it takes forever to get processed, right? And your health insurance may pay for everything, or your workers' comp may pay for all your health expenses. But you still had to miss work. And during that time, going through all that process, you're not getting an income. Our policy pays right away, right? We'll talk about claims in a minute, but our claims process and pay in on average 10 days. 10 days. So great question. Did I answer it for you? Perfect. All right. The last two are really easy to understand. Really easy to explain. That's why they're my favorite to talk about, right? So this one is a critical illness plan. Now, this is what's called a lump sum benefit. So it covers things like heart attack, stroke, end-stage renal failure, and cancer. Statistically, 1 in 2 men will end up with some form of cancer in their lifetime, and 1 in 3 women. That's scary, right? We all know someone who's been impacted by it. If it wasn't in your household, it was probably someone close to your household. Matter of fact, the whole reason I came to this industry, I worked in a funeral home. I was an apprentice to be a funeral director, and the gentleman I worked for, his wife was diagnosed with Clark's 3 melanoma, basically internal skin cancer. They were traveling from Johnson City, Tennessee to Vanderbilt twice a month for her to get chemo and radiation and surgeries and visits. Not only did they have the medical expenses for the treatment, but they also had what? Gas, travel, hotels. And so they had a cancer policy at the time that helped pay them while they were seeking those treatments, right? And Lord forbid that it returns. It pays in addition to. There's only one limitation to this policy, is you can only have it pay you up to 3 times. What I mean by that is, let's say you pick a $10,000 coverage and you have a heart attack. You're going to get a $10,000 check. 2 years later, you have a stroke. You're going to get a $10,000 check. 6 months after that, you get diagnosed with cancer. You're going to get a $10,000 check for that. But at that point, you don't have to pay for the policy anymore, and there's no more coverage left. That's the only limitation to that policy. But Lord forbid something like that was to happen, right? That'd be a lot to deal with. But it is a lump sum benefit. Anything from $10,000 up to $100,000 you can choose. Of course, the higher the amount, the more it's going to cost. Now, this policy is based off of your age. There are a few health questions, but it will cover any of those major illnesses. A heart attack, stroke, end-stage renal failure, and cancer are the 4 big ones. It's a lump sum benefit anywhere from $10,000 up to $100,000. This one you can cover a spouse, and your kids are automatically covered for free at 25% of your amount. So if you cover yourself at $10,000, your kids are going to have $2,500 in coverage if one of those events happen to them. Any questions on that? Last but not least is life insurance. Life insurance is what it sounds like. It pays you in the event of a death, right? If it pays you. It pays your beneficiary in the event of a death, right? So you can elect anything that you want up to $250,000. It is a universal life policy. When I say universal life, what does that mean? Anybody ever heard of whole life?
Yes.
What is whole life?
For your whole life.
For your whole life.
That's right. You keep it for your whole life. There's two main types of insurance, whole life and term life. Term life is good for a term, a period, right? 10, 20, 30 years. Whole life, which is what this is, universal life, is good for your whole life. So as long as you pay the premium, your amount will stay the same until you pass. And then it goes to your beneficiary. I do want to point out something. We aren't the cheapest insurance on the marketplace with this. Okay? This isn't designed to pay down debt. This policy is designed for end-of-life expenses. What I mean by that is burial, right? Giving your family a little leeway while you're dealing with that. Because most people don't realize the average cost to bury someone in the country is $16,000, $17,000, give or take. I know Ben knows because we talked about it, right? His dad owns a funeral home. We were sitting here waiting for you guys to show up. Him and I had that conversation. Can be used for anything, but it is not designed for term, for debt. It is designed to pay those end-of-day expenses. And it is based off your age, whether you use tobacco, those types of things. Now, let's go back real fast before I wrap up today. Let's say you chose these three policies. Oh, I forgot something. Remember the accident policy has a wellness benefit? This one has a wellness benefit, but it pays not only for you, but for you and a spouse if you cover both of you. Okay? But let's say you had all three of these policies and you had a major car wreck and you were out of work for 6 weeks. Would you get benefits from this one? No. Would you get benefits from this one, the accident one? Yes. Would you get benefits from this one? Because you're missing work. Let's say you had a major heart attack. You didn't plan on having a heart attack, but it happened. Would you get benefits for this if you were missing work? What about this one?
No.
Would you? It's accident plan. What's the only thing it doesn't cover? Sicknesses, right? Heart attack, although we didn't plan for it to happen, isn't considered an accident. Bump, a bruise, a scrape, a scratch, a cut. And then last, because you had a heart attack, would you get this one? Yep, that's our lump sum benefit, right? All right, questions on any of those? All right, so I'm sure you're thinking, fantastic, I like this guy. Let's buy all of his insurance. Well, let me tell you, you can make a decision today, but you don't have to. You can take this information home, sit down with your spouse, and look it over, or if you're not married, look it over with someone that you love and respect and trust, and ask them what their opinions are. Okay? But if you're like me, I know what's going to happen. You're going to leave the folder at home. You're going to go home and try to talk about it, and you're going to not have the folder with you. So the best way to explain it to your spouse is it is a company that pays us if we get sick or hurt. That's the best way to explain it. And it doesn't pay medical bills. Medical bills are paid for by health insurance, right? Medical insurance. Our policies pay cash directly to you. You probably have a question of how much do they cost? What did I say earlier, right? On average, $4 to $8 a week on average. Can you get more expensive than that? Absolutely. But on average, $4 to $8 a week is what most people choose. Now, what happens when it comes time and you need to use this policy? Who do you call?
You.
Me, right? And that is important. At the bottom of your folder on the left side, or right side, depending on how you're looking at the folder, my card is there. My cell phone number is on it. Now, I can't file the claim for you. You've got to start the process. Okay, and on the left side of that folder is a document that tells you what you need when that time does come. But please give me a call so I can help you navigate that process. Okay, give me a call so I can help you navigate that process. Our claims pay on average 10 days. Yes, I've seen some pay in 1 day, and I've seen some take longer. On average, 10 days. All right, any questions? Any questions at all? No questions at all? So I either did a really good job or a really bad job. Right? I'm hoping it was a good job. So what I'm going to do, guys, is I'm going to start passing out these folders. And the brochures are in order and how I gave them to you. If you don't forget it at work and actually take it home to discuss it with your spouse, the brochures are on this side. They're insurance terminology all through it, but there are little sections that will give you a high-level overview of what the policies are and what they do. But on this side is a sheet that's kind of an overview of everything. This is the one that I would focus on. Now, if you get bored and can't sleep, absolutely grab the brochure, right? It will put you to sleep. Insurance isn't fun to think about or talk about, but it is important to think about. All right, so I'm going to pass these out. As I pass these out, I'm going to pass a sheet around that's going to have a time slot. Please sign up for one of those time slots. Now, all this isn't saying you're buying the policies. All this is saying is that when I come back on Wednesday, this is the time you and I are going to meet. Again, why is that important? Let's say on Wednesday you've decided you don't want any insurance. Why is it important you come and see me?
Life insurance.
That's right, because you get the accidental death and dismemberment policy, right? And we'll talk more about it individually. I want you to bring 2 things with you when you come. You and who you want the money to go to if you were to pass away in an accident. Okay, that's called a beneficiary. So guys, again, thank you so much for having me here today. Please make sure you thank Chad for offering these benefits available to you. They will be coming out of a payroll if you choose to participate in them. They won't start coming out of your paycheck until your first paycheck in September. Your first paycheck in September, which means you can't get hurt until September 1st, okay? You can't get hurt until September 1st. On sicknesses, you have to have the policy in effect for 30 days. So don't get sick until October 1st. Fair enough? All right, guys, thank you so much. I look forward to seeing you on Wednesday.